Hi there, welcome to kneppyinvests. Well, April is upon us, and if you know anything about me, you know I love this time of year simply because it is Appendix 4C season. So this Appendix 4C season comes 4 times a year, and it just so happens April is one of those months. Now, if you don't know anything about Appendix 4C, I do recommend having a look at my video that I released about 3 months ago, and I'll leave that in the descriptions of this video. So Appendix 4Cs are very important simply because we can get a gauge on how a lot of small cap companies are doing on the ASX. Not only do these small cap companies release Appendix 4C, you also see a lot of quarterly cash flow and activity reports released by miners. So if you are into mining and those sort of companies, have a look out for those. Now, usually at the start of the Appendix 4C month, I do have a look out for the first report to be dropped by a company. And usually over the past few years, that company has been Selfwealth. So I was waiting the last few days for the Selfwealth 4C to be released, but they weren't the first company to release their report this year. And the winner this year was Xref. Hence today's video as a sort of a reward for releasing the first Appendix 4C of the quarter. So they released that on April the 6th. So I'm going to have a look at this company, talk about what they do, have a look at the financials, and why this company was put onto my radar in the last quarter. So there are some good aspects to Xref, so that they are an interesting company, not only what they do, the space they're in, but also their valuation actually does look attractive. And finally, I'll have a look at their chart, and that's probably the one little negative, is what the share price has been doing over the past few months. So Xref is in the right space. So they allow their customers to do background references and ID checks anywhere in the world using their software in the cloud. So it's a very sexy space, and typically any companies in that sort of tech space are highly valued. So is Xref highly valued? So let's have a look at some of the numbers. So their ticker code is XF1. They have a market cap of $53 million. Now, revenue and operational cash flow in the trailing 12 months, $8.4 million of revenue and operational cash flow negative by $3.2 million. So I've mentioned here the annual revenue run rate, which they mentioned in the the quarterly cash flow report, is 15 million. I'm not sure if that's the same as the annual recurring revenue. It does seem like it is the same. So I'm going to assume right now that is the same, even though they use slightly different terminology. But when you consider that 15 million and compare that to the market cap is only 3 times annual recurring revenues. So that is actually suggesting Xref might be slightly undervalued for this type of company. So if you want more information on Xref, they did release their Appendix 4C on the 6th of April, and that announcement was named Q3 Update and Appendix 4C, revenue up 36% while costs flat. So have a look out for that. And I do highly recommend looking at that Appendix 4C because they have about 4 or 5 pages of their activities through the last quarter, and then they finally get into the important stuff, the Appendix 4C, which is what I look for. Now, whenever a company releases their Appendix 4C, there might be about 4 to 6 pages of activities the company has been doing during the past quarter. Not all companies do it, but sometimes you do, and Xref did this. Now, I skip all that and go straight to the consolidated statement of cash flows. So in this statement, you'll see about 5 sections, and I go straight to the first section, which is the cash flows from operating activities. And there are 2 things I'm really looking for here. Now, the first thing is receipts from customers, and what I do is compare this number to previous quarters, and I'll show you what I do in the next slide. And the second thing I do is to see whether the company is operational cash flow positive or negative. And Xref in this quarter were operational cash flow positive by $3,000. So I'm not going to make fun of that, but it is a positive no matter what. Now there are a couple of other sections. So cash flows from financing activities and cash flows from investing activities. I typically skip that. So I quickly go over it to see if there's not any really large numbers to pay attention to. And if you take all that into account, what you do is you see whether the company has lost cash or gained cash through the quarter. And Xref began the quarter with $6.7 million in cash and finished it with 6.2 million. So even though they were operational cash flow positive by $3,000, they did lose cash in the quarter. And the main reason they did lose cash was because they spent money on their website. I think it was something like $364,000. So they are still spending a little bit of money. So that's something to take into account. Another thing I do look for is to see if they do have any loans and what the specifics of that loan. So I've just included a little bit of a snippet from one of their drawn facilities here. So they have drawn $5 million from Pure Asset Management, and that terms of that deal is 4-year term at 9.9% interest rate. So even though interest rates are an all-time low, well, it seems like they're an all-time low, Xref is still paying 10% interest rates for their loans. So you have to keep that in mind, that this company do have some borrowings out there, and I don't really like companies with borrowings, particularly if they are not generating cash. So cash receipts, we got their cash receipts numbers, and what I usually do is I compare that to the history of cash receipts for the company over time. So I've got a cash receipts history of Xref going back to April 2016, and the main thing I'm looking for here is any sort of growth in receipts. And no doubt we do have growth with Xref. Now, there was a bit of a dip during the COVID-19 financial panic, and it's starting to return to the growth rates we saw before COVID-19. So if you go all the way back to April 2016, they've been growing their cash receipts at a compound quarterly growth rate of 11%. So that's a pretty good growth rate per quarter. And over the last 3 years, they've been growing that rate at 7%. So it hasn't really slowed off. So even though those cash receipts are growing, getting to higher numbers, sometimes you might see those growth rates just trail off a little bit, because the higher the numbers you get, the less likely that growth rate is able to be sustained. So those numbers are very attractive to me. I like to see this sort of graph, an upwards trending graph, and I like to see really good numbers when it comes to growth rates. Onto the charts of Xref, and the first stop is looking at the 4-year weekly chart. And really, well, it's not an exciting chart, but it's a very interesting chart, because I think what happened with Xref, the market got a little bit overexcited with their story way back in 2017. You can see with the share price getting as high as 80 cents. So I think there had to be some reality check into the market before I got excited with Xref. And we've started to see that now. So even though the financials of the company have been improving, cash receipts have been growing, they've become operational cash flow positive for the first time in their history, the market quite yet hasn't caught on to this changing story. But we have started to see a developing uptrend in the weekly chart. So the low in the COVID-19 financial panic was 10 cents, and I've just drawn in a bit of an uptrend there, and we're still in that uptrend. So the story could be changing with Xref, but I think we have to sort of churn through a lot of those holders who bought back in 2017, 18 and 19 when the share price was between 50 and 80 cents. I think we do have to churn through a lot of those shareholders before the share price can get above those levels. And finally, I'm just going to look at the 6-month daily chart and just look at some very interesting on this shorter term graph. And the first thing is we do have a good support level at 24 cents and a potential double bottom. And double bottoms can be quite a powerful signal. So we've been in this medium term downtrend. Share price got to 40 cents in late November, early December. In fact, the share price went from 15 cents to 40 cents quite quickly, and that was on higher volume. In fact, they got a price and volume query from the ASX in, I think it was about 26th of November. So that share price rising was based off no news. And I don't actually like to see that. I like to see share price increasing on the back of really good news. And then we've seen a bit of weakness in the share price since then, that top of 40 cents. But we've seen a potential double bottom at 24 cents, which is in line with a good support level. And then we saw that positive Appendix 4C. Now the share price increased 16% on the back of this Appendix 4C. So the market did like it in a way. We didn't see massive volume come in. I would have preferred to see more volume come in. But I'd like to see the share price get above 30 cents, because that looks like it's the next resistance level. And if it gets above 30 cents on good volume, that would be very positive moving forward for Xref. Now, the one thing I have mentioned is I would have rather see more volume come into the market. So if you go back to November, December last year, there was a lot of volume coming into Xref. So the market was getting excited. And it looks like that excitement has waned over the past few months. And that's why the share price has drifted back. So a lot of times when the share price drifts back on lower volume, that can be healthy. But when you see the share price rebound, you need a lot of volume coming back into the market. And when you compare the volume back then to now, we haven't seen the same volume come in. So the market hasn't quite got excited about the Xref story just yet. And the one driver for the increasing volume could be fund managers. So I'd like to see more fund managers get excited about Xref. And if more fund managers do, that will drive up the volume, drive up the share price. And maybe we could see a new uptrend develop here. So we are potentially in the stages of a new uptrend developing, but I'd like to see the share price get above 30 cents for confirmation of a new uptrend developing. And that's all I've got on this quick take Appendix 4C video for Xref. And as a reward, as a prize for releasing the first Appendix 4C for this quarter, I am doing a video on you. Now, it won't be the last video I do on companies releasing their Appendix 4C. I hope to do many more over the next 3 or 4 weeks, even longer, as we see a lot of these reports being released towards the end of the month. Now, if you are an Xref shareholder, have been a long-term shareholder, and I've got something wrong, or you want to clarify something, make sure you leave a comment. I don't mind anything I say being corrected because I am human and can get things wrong, and especially for a company that I don't know all that much about. So the whole point of me doing this video is to share an idea, and hopefully if I give you some inspiration to do more research on this company, you do more research, and if you really like this company, maybe you can buy it. So that's the whole point of me doing these videos. Now, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for now. Have a good day. Bye.